Hey everybody, it's been a while since I made a video, but with that being said, the reason why I'm making this one is because I own a lot of shares in Tesla and NIO, and I initially found Tesla first back when it was in $100, and then I put money into Tesla knowing that this is probably going to be the future, and I was looking for a second money to I was looking for a second company to put my bet into, and Neo ended up being the second one that I could find. There was also BYYD, I believe, but I was looking through all the other companies, and this was back in early 2019, late somewhere around 2019, early 2019, back when the stock was in the dollars, in like at the $1.92, I believe. And Neo was the only other company that I found worthwhile to invest in the Eve market. And there's a lot of different choices. There's Workhorse, but to me, um, because I made such a huge profitable gain off Tesla and Neo, I'm very, very picky on where I decide to put my money into. I don't like to put my money in just pump and dump Eve stocks. And to me, Workhorse was one of those. It was to me, Workhorse, while it is a good company and it was in a niche place, I felt as if that you're riding on the bet whether or not they're gonna get that USPS deal. And while I do believe that's a big deal, um, and that maybe that $6 billion can validate the price, I don't know. I can be really picky with my investments because I bought Tesla in the hundreds and Neo in the dollars. So I'm very picky. I don't have to buy into stocks that are just gonna be pump and dumps. And I think that if the e bubble and if the electric vehicle bubble were to pop, there's a very few companies that would be okay, and Neo, Tesla, and a few others would be okay. But I don't know about the rest of them because they don't carry any real merit. They're speculations. But because we're talking about speculation, I wanted to talk about this article, and the reason why I want to talk about this article in particular is because it's talking about the de-risking. It says a de-risk story means Neo stock can keep gaining, and this is important to understand and consider because, you know, to give a little bit of info on my investments. When I first invested in Tesla, it was very speculative. This was after it was getting hit after hit of bearish sentiment, and I was constantly looking at my investments, wondering like, hey, when should I pull out? This is my entry point. This is my exit point. And I did the same thing with Neo. I would always look at when's my exit point, when's my entry point, and how I want to play Neo out. But as the sales numbers increased for Tesla and then more solidification happened and more catalysts, I don't even think about Tesla anymore. I have my Teslas and I just buy on the dip, massive dips. I don't buy on small dips. I just buy on massive dips because I can be really greedy because my average I believe is $39 as of today. And with Neo, my average is around $4. And with that being said, I can be very picky on when I choose to add more of these companies into my portfolio. And I do buy. I make sure I buy both these companies every month, but I can be very picky, so I don't have to jump on Workhorse just because I don't want to miss the bubble, or I don't want to have to pick up Shell, Helion, Nikola, Solo. Well, I actually do buy Solo, but I don't have to buy all these other speculative stocks that have no real merit because I've got such a great Eve portfolio as it is. But with Neo, while there are catalysts on the technical analysis side and especially on the fundamental analysis, if you even look at the trends on a technical basis, you can see the consolidation. Usually after every good news that like every earnings report, it usually goes up. It goes down a little bit from profit taking or something, and it consolidates. But with that being said, there's always a trend, and it stays pretty similar, and it's moving upwards. And I'm gonna read this article. I haven't read it yet, but I want to give my review on it just because as more time passes by and I see more and more bullish news regarding Neo, the similar things that happen to Tesla, I slowly over time with Tesla, stopped being worried about investing in that company. And the same thing has happened with NIO. It's actually really great because I've actually had sleepless nights with both these companies, because I have a large amount of my portfolio in these companies. But with more news like this, with September having up to what 4,704 vehicle sales, only 16 were the EC6, so I'm hoping next month's even going to be better with the EC6. And it's also a great thing because the ES8 had the most sales, I believe. Um, yeah, it's showing me that NIO is becoming more and more secure. I don't have to worry about it, and that's great. So with that being said, I'm gonna get into this article, and I want to see if they have similar perspectives or if this can reassure me a little bit more on my investments, and that maybe I don't have to worry as much with NIO like I don't with Tesla anymore. But I still worry a little bit, but I can put Tesla on the back burner and not have to worry about them. And as more time passes by, I find myself worrying less about NIO. So, this article is made by Investor Place, and there are two ways a stock move higher. There are two ways a stock can move higher, and NYSE NIO stock has been benefited from both so far in 2020. The first The first is through improving future prospects. In theory, a stock price should be equal to the net present sum. I'm sorry, it's been a long day. A stock price should be equal to the net present sum of all its future cash flows. If the market believes that those cash flows will be higher than previously thought, the stock price should, in turn, rise. Obviously, this is theoretical movement has played out in practice for NIO stock. NIO has more than quadrupled so far this year. Optimism towards electric vehicles more broadly along with those strong sales results from NIO itself. Both have been key drivers. Investors are seeing potentially bigger profits and thus a higher stock price in a blue sky scenario. Yeah, I agree with that. Every time the earnings come out and the sales numbers come out, I'm like, okay, is it moving in upward trajectory? Is it beating last month's? Is it beating last year's? And every time it shows that it's in an upward trajectory, and I have to gauge the economy as well, it makes me more. I look at a bunch of different things with NIO and Tesla. I look at the sales numbers. I look at the fundamentals increasing. I look at how's the business doing? Are they innovative? How are they investing their money into the company? How what's the CEO been up to? I even look at things like their Twitter followers, how they conduct themselves on social media. And NIO's doing a little bit better. NIO's making all these small improvements. So as long as they're moving better in an upward trajectory, as long as they're getting on a bullish trajectory as well, it allows me to be more reassured of myself in my investments. So these are things that I consider. But there's a second, less covered and less obvious way in which the stock can gain, and that's through lower risk. Yes, sir. If I offer you a 50-50 bet that pays a $10 if you win and $0 if you lose, you'd want to pay something less than $5 that bet to be profitable. But if the reward stays at 10 while the downside drops to 4, a price below $7 now looks more attractive. In that simplistic hypothetical, the rewards didn't change, the risk did. The same holds for the NIO story and the moment. And thanks to a pair of big deals, NIO significantly lowered the risk surrounding its stock. Overall, that not only helps explain why NIO stock has gained this year, but why there's plenty of room left in the rally. Exactly. It's small things, not small things, but the supercharging networks that came out, them making deals with those with other retailers, even hearing the deals with Huawei, and investing in increased sales numbers, line of cash from banks, these kind of things, especially like the Hefe agreement, that solidified that NIO was. I don't have to worry about NIO as much as I used to, and it's things like that that ensure me that hey, I don't have to worry about this company. It's gonna move upward. There's a base right here that I can think about, and it can only go up from here in most cases. So less risk, yeah, very important. Less risk, just like with Tesla, less risk. That is why I can have peaceful nights again. It's important to remember that as recently as this year, some analysts were arguing that NIO had a real chance of going bankrupt. As a novel coronavirus pandemic hit China, the company had to delay its payroll by 6 days. Soon after, the company raised $100 million in convertible notes, which converted into NIO stock at a price of just $3.07 per share. Bears argued that this wasn't that the Bears argued that the raise wasn't enough, and they were right. But NIO wasn't done. In late April, NIO secured a $1 billion funding from the Chinese group of investors. The deal was dilutive to NIO shareholders. The new investors received a 24% stake in NIO China, but significantly minimized worries about cash burn. More importantly, it gave NIO the flexibility to aggressively attack in the market. A company can't grow and pinch pennies at the same time, and so it's little surprise that NIO stock has gained so nicely since the deal was announced. Indeed, Investor Place's Matt McCall argued that at the time that the capital raise was a key catalyst of the stock. Yes, it was. Just like other things that they've done. There was them wanting to build a factory with the government's aid, I believe, would have been a huge catalyst for NIO. They ended up doing that, but that's okay. There's other things as well that NIO has done to make up for that. But even then, NIO wasn't done. The company raised another $400 million through the equity offering in June. Another stock sale this month brought an additional $1.7 billion. Thus, the cash worries are now gone, and NIO has dry powder to accelerate its growth. It can look to bring manufacturing in-house at those plans reported to shelves last year. It could expand aggressively into new cities in China. At the very least, a company with real bankruptcy risk just 8 months ago is on firm footing. Again, that alone should move and has moved NIO stock higher. That's true. I mean, there was one economist slash business entrepreneur who talked about, the debt that they raise when starting businesses don't really matter if they're very confident and there's a very high hit rate that they're going to be profitable in the near future in years. So it doesn't matter that they accumulate amount of debt because if the business is practical and it's going to do well, that's just something you're going to have to deal with, monetizing, utilizing your debt effectively. And I think NIO has done a very good job at that. William Lee acknowledges that, the worst thing that could happen was that he had to work a regular job to pay it off. And, a lot of entrepreneurs will argue that debt is okay if you know how to handle the debt and how to use it effectively. I'm no businessman, though. I'm no financial advisor, so what do I know? And more reward. Of course, the big year-to-date rally in NIO stock isn't just a matter of bankruptcy risk being taken off the table. NIO is starting to deliver on its potential as well. As Mac McCall wrote last month, the second quarter earnings reported show that the company is nicely on track. Vehicle gross margins have moved into black and should improve further. Meanwhile, deliveries just kept rising. In July, NIO delivered over 3,500 vehicles, more than quadrupled the prior total. The company tacked on 100% plus growth year-over-year growth in August, with nearly 4,000 deliveries, up 12% month over month. Simply put, NIO is an upward trajectory. Sounds like something I say all the time. The impacts of the pandemic clearly have receded, and now NIO is moving towards leadership of the high-end electric vehicle market in China. As a result, further success would seem to imply that the current market capitalization of $25 billion is too low. I can agree with that. See, a lot of Americans are fed propaganda regarding China. They're fed a lot of these negative things like, oh, China's this, China's that. But what do most Americans really know about anywhere else besides America? Not much. Have they ever been anywhere besides America? In most cases, probably not. What do they know about China? Whatever the media wants to fill into their head. What does the media say about China in most cases? That they're bad people, that their government is a dictatorship, communist, blah blah blah. But what do people really know about China? I would argue not much at all. You may argue that China is very bad in the way that they run their government and the people, but whether or not you like them or not, whether or not you agree with them or not, the economics of China is completely different. The position is different. They have 1.3 billion people. We have 300 million people. There's so many differences fundamentally with both countries that you just have to accept that they do things the way they do it because it's the most effective for them, and the US does things the way they do it because it's supposedly the most effective for us. So before you start hating on China, they did bring 700 million people out of poverty. You could disagree with what they're doing with the Uyghurs, but then you'd have to look at Americans' history too and then wonder, hey, Yes, we can blame China for doing all these horrendous things, but what has America done that's super horrendous as well because of their position in economics during that time and what they're trying to do? So everything has a reason behind it, and I don't think people understand this. There's confirmation biases between both people, so again, you really have to question yourself on why you think the way that you do. And why are people telling you to think in a certain way if others disagree with you, you know? But anyway, I still think that China, whether or not we agree or that they do things differently, aren't necessarily bad. It's just effective for what they're doing, and we need to respect that. Uh, Maybe how you run America doesn't necessarily work in China, and I don't think it would when you have 1.3 or 1.4 billion people in the position economically that they're in. And it's arguable that China might surpass the U.S. in a lot of different scales, and it's not about whether or not you're patriotic. You just have to accept that, hey, this is a very big possibility. And you know, if you're here to make money, you just have to understand that it's not about what you want, how you want things to be. It's not about emotions. Take emotions out of it. It's all about making profit. It's all about how things are. It's about how things are gonna be. So, with that being said, I'm gonna just keep getting this article. NIO stock isn't a zero risk. All told, NIO still looks like a buy, even after the big gains so far this year, and with bankruptcy risks off the table and execution impressive to the point, there's little reason the rally can't continue. That said, it's worth making the point that a lower risk story isn't a zero risk story. NIO still isn't profitable. Chinese stocks have had their issues on occasions, and auto manufacturing, even when that manufacturing is outsourced, is currently the case for NIO, can be tricky business. But all the stocks have some risk. Few have opportunity that NIO does. So far in 2020, the company has positioned itself perfectly to take advantage of the opportunity and taken the first steps towards becoming a market leader. As long as those trends continue, and I believe they will, NIO stock can and likely will be rallying. Right, I agree with that tremendously. Like, I don't have to worry about NIO ever going bankrupt, but I do have to consider the sales numbers and how they're doing month over month. So, those are things I look forward to every month. And, with Tesla rising, electric vehicles being a rise politically and government and with how things are being run, oil, we're starting to understand and acknowledge that, hey, the earth is kind of dying here and electric vehicles are becoming more popular and more the norm. I see this a very bullish thing for NIO, and overall, I'm very bullish on the company. It's good to see that this article made has a lot of same views that I do, and it just reassures me that, hey, I'm making the right choice of NIO. With that being said, with Tesla, I don't worry about them too much, but with NIO, I still do. But they're doing a great job, and I see myself in about 6 months to a year from now. Not worrying about NIO at all. Just like with Tesla, I don't worry about them at all. I only look for opportunities to buy Tesla now. I only look for opportunities to buy NIO. But with that being said, I hope they keep producing good news. I hope they keep increasing their sales numbers and eventually become profitable, and probably much sooner than Tesla, just because of where they're located and on the other fundamentals with the company. But with that being said, I hope you all have a great day, and always question things around you.